Hi, friends. I'm Edwin Silié, your South Florida Realtor. And on this channel, I help families and first-time home buyers build legacy through real estate. So thank you for joining me. Today, we're talking about something that can absolutely change your financial future, and that is how to pay off your mortgage early and the powerful benefits of doing it. Let's get into it. Here in South Florida, home prices are often $500,000, easy, and a whole lot more, of course. So with a 30-year mortgage at 6.5%, a loan of $500,000 will cost you more than $1.1 million by the time that you have finished paying it off. Think about that. You're not just buying a $500,000 home. On top of that, you're also buying an extra $600,000 in interest that goes directly to your bank. Of course, that's a second home. And your retirement and your children's education all gone because of the 6.5% that you decided to pay over 30 years. Now, imagine the opposite. Imagine waking up just one morning and you're realizing that you own your home. Free and clear. No mortgage, no more payment, nothing else due on the first, no bank with a lien on your house, just a peace of mind, a financial freedom, and the pride of knowing your family's home is yours, 100% yours. What would that do, or what would you do just with an extra $3,000 a month, right? So on average, a payment of $500,000 loan is about $3,160. That's on average, right? So what would you do with it? Would you save more? Would you invest in real estate? Would you retire early? Would you live better? Would you give more? That's the freedom that comes with paying your mortgage early, and that's the reason why I strongly believe that you should do it. Can we have the arguments of how you use your money better? Sure. But let me tell you just a few ways or a few reasons why I believe making your mortgage payment and paying your mortgage off is a good investment. I'm not saying this is the only investment. I'm not saying this is the only way to do it or to be free or to invest your funds. I'm not saying this, but this is one sure way that you could do a lot with your funds, and while you are, making payments, but also what you could do with your funds after you make your payments, after you finish paying your mortgage, and the freedom that it comes with it. So today we're going to be talking about different ways that you could just pay off your mortgage and the reasons why you should pay off your mortgage. And let me show you how. These are nothing new. These has been around for a while. And the reason why they have been around for a while is because they still work. They still work, and a lot of people are still finding freedom and still finding not only shaving time off their loans, but also being able to not pay to other people, not pay to the bank, not pay to other lenders money from your hard work. Why give someone else your money when you can put that money to work for you? So enough of that. So let's get into it. These are 8 different ways that you could use to pay off your mortgage. And as I said, you should definitely do it. Let's get started. The first method that you can use to pay off your mortgage early is just making one extra payment per year. Not per month, we get to that, per year. On a $500,000 loan, and let's say your payment is $3,160, as I said before, if you just add one extra payment each year, you could shorten the loan by at least 5 years. That means that if you lower your loan by at least 5 years, you could save $120,000 in interest or more. Of course, I'm using the 500,000. I'm using the 6.5%, and I'm assuming a few things regarding, of course, PMI and a few other things and taxes and so on and so forth. So we can get into that math at a different video. But if you make one extra payment per year, and even if we make it even, if you make $3,000 a month, if you pay $3,000 a month, and you just want to pay one extra $3,000 a month per year, you could save more than $120,000 over the life of the loan. That is a very common way, a very popular way. People use their taxes, or they use some of the extra income that they have, and they just make that extra payment to save on those interest. The second method is just making biweekly payments. How does that work? Well, instead of making that one payment, let's say $3,000 a month that we were talking about before, let's say every other week you make $1,500 instead of the $3,000. It's going to feel almost the same. It's going to feel like you're still making that $3,000 payments, but in fact, over the 52 weeks, you're going to be making that extra payment similar to what we said in the first method, right? So, and how it works is that because you're splitting that payment that every other week, you end up paying those payments, and you can still save, still reduce the number of payments that you're going to do over the life of the loan, and also reduce your interest. The point is, and the reason is, what you really want to do is just not give your money away. That's it. Just don't give your money away to someone else. Why? You work so hard for it. Put it into your house, get that money back. Imagine that 6% or 6.5% or 7% or 8% nowadays. People have all kinds of interest rates, right? Imagine that you are putting that money back into your pocket. That you are, instead of putting it somewhere else, that you're paying yourself an 8% loan, if you will. You're paying yourself an 8% interest back, or you're saving yourself. That's really what you're doing in the long term. And another reason why it's important to pay off your mortgage early is because you really don't know what's going to happen in your life. Death is a real thing. Losing your job is a real thing. Being able to leave legacy to your loved ones and not leave them debt, it's important. So I just think it's important that we do whatever we take to be debt free. I do believe that there's good debt. I do believe that there's bad debt. But being debt free, there's such freedom that comes with it. That is beautiful. And there's ways that you can use debt to your advantage. But I'm not sure that your mortgage is the best way to use debt, right? And we can even argue is your home an investment? We could argue that maybe. Let's just put it that way, maybe. Another video I'll talk about that. Your home is not necessarily an investment. So you really want to have money to truly invest. And you want to have your home paid off, so that's not holding you back on what you could truly do with your money and how you could truly make your money grow. So let's pay that off. So biweekly payments is one way that you can make that happen, to shave off years and therefore put more money back in your pocket sooner, faster. A third way that you can pay off your mortgage early is just rounding up. Just round up. Let's say you have a payment of $3,160. That's what I said at the very beginning. Instead of making that monthly payment of only $3,160, round up to $3,300. Just round up. That extra $140 a month could save you $50,000 and cut your loan, your 30-year loan, by at least 2 years, right? So imagine that. So you're paying $3,160 every month. Let's just do that little effort, and let's just put in your mind when you get paid, as you do your budget at home, that you're gonna pay $3,300, and just leave it at that, and make it automatic, and ensure that difference goes towards your principal. Imagine you no longer have to wait, just by doing that little change. You no longer have to wait 30 years that gets shaved down, and that's $50,000, at least $50,000 that you don't have to give to someone else. Money that you could use for your child's education, that you could use for retirement, that you could use for going on vacation. I mean, you could do anything with it. And of course, investing and being financially free, which is something that we here deeply believe. The fourth method is just applying, or we call it, apply a windfall, your windfall to principal, right? What is that? That means any extra money that comes in, whether it's your taxes, whether it's your bonuses from work, whether it's, you want to maybe get a side hustle, right? Maybe you come together as a family and you decide that the goal is to put X amount, $5,000 extra, to put $10,000 extra, to throw everything that you don't need that is not in your budget, everything extra that you can get, you're going to go throw into this mortgage. Of course, we're talking about this because, again, we believe that we have paid every other debt off. We have any other debt that is holding us back, and I'm talking about credit cards with 30% interest, and I'm talking about those side loans, or I'm talking about even what you owe to your cousin, from back in the days, whatever. Pay everything else off. Now we're focusing on paying the house, and we're getting this extra income to pay off. Just put in the house, whatever it is. And you'd be surprised little by little how over time your debt starts going lower because you put in more towards the actual interest. And remember, the interest is what causes the principal. You put in to the principal because the principal is what causes the calculations for the interest that you're going to be paying over time. So the more principal you have, that means the more interest you get charged. That means the more money you have to pay, which means the less money that you have. I know I said a lot. Hopefully it makes sense. So that's what it is. What can we do? Let's start a YouTube channel. Right, let's as a family, let's start some sort of hustle that we're crocheting and selling what we have, or let's commit that for the next 20 years, what we get from our taxes, if you get anything back from your taxes, that you're gonna put it towards your principal because you're gonna pay that down, and it could happen. And over time, if you're disciplined, you're going to see your principal start going down, and you're going to see, you no longer have 30 years. You no longer have 20 more years. You no longer have all this time left, and you could actually see over time, you're able to see the finish line and how you could be financially free and free from debt, and therefore make your home actually yours. The fifth way is simply to just refinance smart. Look at the rates, look at refinance rates, shop around. And if you see that that the rates are dropping, maybe you want to refinance to a 15-year loan instead of a 30-year loan. And please, by all means, if you refinance, do not refinance for a higher amount of time, meaning if you have been paying your house for the last 4, 5, 6 years. Don't refinance to another 30 years just because the interest rate is lower. No, you want to refinance at least where the interest rate is it's at least 1% off. That's important. But also you want to make sure that you're refinancing to the minimum the maximum amount of time that you have in your mortgage currently. So you've been paying your mortgage out for 10 years. So that means you have technically 20 years left. Don't refinance for 30. Try to go down to 15. Try to at least stay at 20. Will you be paying more if you go down to 15-year loan? Yes. Your mortgage payment will be higher. However, you're going to be saving so much more in money because you're paying it with time, right? So either you pay with time or you pay with money. So might as well, let's shave that down. Let's do a 15 year. Let's do a 10-year. As long as you can make it lower than you currently have after you refinance, and therefore lower the amount of money that you're giving to someone else, lower the amount of interest that you're paying out. Let's get this done. Let's get this done. Let's get this paid off as soon as we can, so we can reinvest and we can truly invest in our future and our children's future and our grandchildren's future. Method number 6, you can also just make principal payments only. So in some cases you can talk to your bank. So send in any extra payments that you have and make sure that it's marked towards principal only. $500 extra a month can save you $200,000 in interest and cut off 8 years. So now this is very simple. You guys could figure that you could have an extra $500 a month. Maybe this is more than rounding. This is more than different than refinancing. This is very intentional. This is now I have $500. I'm going to send that $500 with a check or debit or whatever, however your bank takes a payment. And that $500 extra a month, believe it or not, on a $500,000 home could save you $200,000 over 30 years and lower your mortgage, lower your time paying your mortgage from 30 years to 28 years. So simple $500 a month. I know it's a lot. I know a lot of us don't have an extra $500 a month laying around. But if we look at our expenses, if we look at how much money we waste in other things, maybe we could do 300. Maybe we could do an extra 100. Whatever it is, throw it at it and make sure it's for principal payments only, not interest. And you see that you can make this 30 years feel so much shorter and you're going to pay off a lot less to a bank or to a lender. Method number 7 is some people call it house hacking, right? It's house rental. Can you rent a room in your house? Can you be in discomfort for a little bit? And not discomfort so much, but, can you maybe, rent out a room, a guest house, or just part of your home and apply that money towards a mortgage? Don't think about spending it. Don't think about what you could buy off with it. What if you can rent a room for $1,200, which is very possible here in South Florida, and put that into your mortgage? $1,200, you can knock down 10 years, more than 10 years from your mortgage if you're going to throw that into your mortgage, that $1,200 into your mortgage. So very easy. Is having people in your home is more uncomfortable, yes. However, the idea is to invest now in your time and money so you could have a whole lot more and do a whole lot more in your future and your kids' future and your family later. My last reason that I'm going to share today, also not as popular, but why don't you just sell and buy something smaller? Can you do that? Can you downsize? Do you need the large home that you have? So sell your larger home and move something smaller. Immediately, that's going to save you so much. You apply those savings into your mortgage. Selling a $500,000 home and moving into a $350 home can save you $950 immediately every month. You're cutting things in half. Left it for last, because I know it's not a favor. Maybe you love your home. Maybe you love the big spaces. Maybe you love the big yard. But do you need it? Do you need it now? Could you do better later? Right? And of course, bigger home means bigger electricity bill and more repairs and everything else. I'm not saying don't live comfortably. And I do agree in buying. I do agree in owning. But if maybe your kids out of the house, maybe you don't have no one else, maybe it's you and your spouse that are together. Maybe you don't need. I know they're gonna come visit once a year. I know you're gonna have guests once a year, but you need so much. Would it be better and less stressful if you downsize and just live comfortably? You could still live comfortably in something less expensive, and maybe in a different part of town that you could put the earnings from your house into it and therefore save a whole lot more in the long run. So, can you do it? Of course. Again, why would you even care about paying off your mortgage early? Let me break it down. I know I'm saying it again, but it's that important. One reason, peace of mind. Knowing your home is 100% yours, which means that no matter what happens with the economy, you have security. Another reason, save hundreds of thousands of dollars. And that's money that you can redirect into retirement, investment, or your kids' future. Another reason, financial freedom. Without having to make a monthly payment on your mortgage, each payment that you have now open up so many other choices, careers, you can start a business or even retire early if you wanted to. Another reason, less stress in your life because life happens. So having no mortgage gives you breathing room. Again, with paying off your mortgage, you can begin building generational wealth. You're not leaving your kids with a bill. You're leaving them with an asset. So another reason, you can live more generously. Travel, give, serve, enjoy the fruit of your labors without the bank taking the first cut. And at the end of the day, paying off your mortgage early is about more than money. It's about freedom and flexibility and creating a lasting legacy. So let's pay off that mortgage. So, quick example. Again, I started with this. I'll end with this. A standard $500,000 mortgage, you're going to pay $1.1 million in total. An extra payment a year could save you $120,000. Same thing happens if you do bi-weekly payments. Running up, you could save $50,000. If you put extra money in your account, you could shave off 15 years if you work really hard at it. Refinancing to 15 years too, you could save $325,000. This is something that you can actually do. So here's the truth. When you pay off your mortgage early, you're not just saving money. You're buying a peace of mind. You're reducing stress, and you're creating opportunities for your family that stretch beyond the walls of your home. It's one of the smartest and most freeing financial moves you can ever make. Again, is it the only one? No. But it's one that if you focus on, you cannot go wrong and you will not regret. If this was helpful, hit that like button, subscribe, and share this with someone who's working on their financial goals and are wondering whether it's important or not to, pay off their mortgage. And if you're looking to buy or sell here in South Florida, visit me at edwinsilie.kw.com. I would love to walk this journey with you, and I would love to help you in your financial goals, in your dream home purchase, in your dream home search, in your vision, in your dreams, in your future for you and your family. I would love to be part of that. So again, hit that subscribe button. Thank you for making it this far. Thank you for walking in the journey with me. I know it's a relatively new channel, but with many of you supporting it, I know we can reach to many, 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 many people. So again, remember, my name is Edwin Silié. God loves you, and so do I. Take care, and God bless. Bye-bye.